Hi, I'm Randy Pierson, Vice President of Life and Annuities for Gordon Marketing. And if you're an astute agent watching this video and have been keeping up with the recent insurance news, you may have noted that the FIA market, the Fixed Indexed Annuity market, is starting to heat up. So in today's episode of Selling Life and Annuities, I got my best annuity RVP, Tim Luby, here, and we're going to talk about the best FIAs for growth. Stay tuned. All right, Tim. So fixed indexed annuities, as I said just a moment ago, I've been noting that the industry news that I'm seeing is that the FIA market is starting to heat up. And whether that's because of uncertainty in the equities market or the interest rate environment or concerns about rising taxes, whatever it is, right, whatever the reasons are, FIAs are becoming a hotter product right now. And so agents out there need to know what are the products that are really selling, that are really hot right now. So in that, let's first talk about the growth space, right? I mean, in the growth space, what's the hot products and where would you direct agents to?
It's funny because it's kind of a loaded question. And I always say, what's the best? What's the top fixed indexed annuity for growth right now? And
it's a moving target, right?
Yeah, and the answer always is, it depends. Mm-hmm. And it does depend. And if we talk about fixed indexed annuities for accumulation for a minute, there's not a lot of differentiation in that market. They're all fixed indexed annuities, often 7 to 10 year chassis. They all have allocation options where you can put money in different indexes. Mm-hmm. They all have free withdrawal provisions. Many of them have living benefits, a kicker or a waiver for confinement or long-term care needs or unemployment, all different kinds of things that they have. But many of those are sort of a ticket in the game. You have to have that to play. What really kind of starts to make them different is how the allocation works, how the indexes perform. Okay. With all of them, from a guaranteed standpoint, basically, you're not going to get less than you put in unless you choose a fee option, which we'll talk about in a minute. If you don't do fees, you should never have less than you put in on the guaranteed side. Guaranteed assumes that the indexes never perform.
Okay, so by your response, I take it to mean you're not going to tell the advisors what the best product is out there, right? Because as you alluded to, it really depends. It really depends on the client, the situation, the scenario. That you're trying to meet the objective, right?
Yeah, and let me explain a little bit why. 2 products, 2 great carriers, 2 different index allocation options. One of them shows the account value doubling in 10 years. The other shows it going up by 90%. Okay, so the 100% one wins, right? Not necessarily. Because no indexed annuity illustration, no product is going to perform the way it illustrates.
Right.
So, and therein is kind of the rub. We've got all these index options from all these different carriers. They have rates, they're par rates or caps or whatever they are. But one thing we know for sure is that rarely ever, if ever, does one perform the way it illustrates. So that's why it's hard to say this one's better. Because it might be better from an illustrated standpoint, but that doesn't necessarily mean that it's going to be the better one 10 years from now when someone's actually witnessed actual performance.
As a 35-year veteran of the insurance business, I one of the things that I've always admired about the industry that I work in and love is the creativity, the innovation, right? The persistent striving to come out with a better product for consumers. Now, obviously, the carriers are doing that to try to generate sales, but they truly do try to think about what does the consumer in today's market need, want, that might prompt them to actually sign on the dotted line and stroke that big check. So you mentioned a few of the bells and whistles, as I might say, on annuities that are out there now. I mean, what are some of the more innovative, the most captivating features that you see coming out here recently that are really impacting sales?
Yeah, most of the innovation improvements in the products have probably been around the indexing and the allocations. A few years ago, the S&P was highly popular, and it was in most indexed annuity products. Mm-hmm. Today, we're not seeing a lot of money go into the S&P options, and that's because they have all these new volatility controlled or rules-based indexed annuity solutions that are out there now. And these have been important innovations because they give the consumer the opportunity for a much higher return than what the S&P options would offer today. But they also do it on an affordable basis, so the carrier can better afford to do it at a lower risk and probably a higher profitable basis. So that's one of the differences. So it's not uncommon for us to see an indexed product that has 10 choices for allocation within the product. And one of those things that's even newer, the newest thing that's out on the market right now, is the option to do the allocation with or without a fee.
Yeah.
So fees are interesting, because with an indexed annuity, you could never get back less than you put in. If you elect to take the fees now, you could actually get back less than you put in. But a fee can take your participation rate from 100 to 200, or from 120 to 160, or from 120 to 210.
Yeah.
So the fees are kind of an interesting newest innovation in the market.
And without turning this relatively short video into a tutorial on indexing and how that works, in essence, what you're saying is the industry has gotten very creative in providing opportunities for the consumer to leverage up their growth opportunities,
That's right.
their returns, right? And I would agree, volatility control indexes within annuities, I think, have done a great job especially with older clients who are looking for stability in return of solving that problem that you just mentioned, and that is the risk, right? Their money in an annuity might be safe, right? But they still want a return. And the volatility control indexes have helped make sure that they'll get something, right?
That's right.
They may not get big numbers, but they're going to get a number. But conversely, some of these new fee-based indexes could provide opportunities for dramatic returns, perhaps better returns than most agents have seen for their annuity clients in quite some time.
Yeah, they are dramatic. And I've seen some examples where without fees, they might double the value in 10 years. With fees, it could triple the value in 10 years. Now, again, it's an indexed annuity, so it's just an illustrated value.
Right.
The guarantees are the same, but
no worse than the
designs.
Promises they're going to get by going into the market. Right?
That's right.
In fact, much better, right? Because
no downside market risk.
Right.
Market risk is eliminated. The fee that you would choose only for the right client, for the person, that they can understand it, is understood. They know what it is up front.
And during this conversation, and our time is quickly coming to an end, but during this conversation, I've been thinking about one carrier in particular that has some really exciting new and enhanced index options. We're not going to mention it on this video. If you as an agent are curious to find out what some of the hottest products are out there with some of the newest and most innovative indexing options, you need to call Tim or one of the other members of our annuity team here at Rd Marketing. But with that, I must call this episode of Selling Life and Annuities to an end. I want to thank you for watching. Please do me a big favor. Click subscribe at the bottom of this video, as well as the notification bell, so that when we come out with new content, you'll be sure to know about it and be able to watch and hopefully impact your business. But with that, I want to thank Tim for participating with me on this video, and we will see you next time. Happy selling.